I'm going to buy silver. It's $100, $120, $200, $250, $600. Oh, I better buy it. But actually what's been happening is that the silver price has been managed by China. You've got this deficit, which quite correctly comes out of the Silver Institute's tables. That has been made up by China exporting silver. You could put it that China foresees a situation that's not prices rising, but the currency's falling, and she's indulging, if you like, in a central bank's version of a crack-up boom. This is something that the economist Ludwig von Mises wrote about People's Bank, the SGE, have done. But bear in mind, the SGE is owned and run by the People's Banks. They weren't going to survive. So what she had to do was to play the fiat currency game, but never forget she needed to protect herself against their collapse. She's probably, as the state accumulated a further 20, maybe 25,000 tons into the hands of the public, that is a further 28,000 tons.
What if the biggest story in gold and silver isn't today's price, but what China has been quietly doing for decades? As investors watch inflation, Federal Reserve policy, and rising geopolitical tensions, gold and silver have become increasingly volatile. Yet despite the short-term swings, central banks continue adding gold to their reserves, signaling that they still view precious metals as strategic assets. Alasdair Macleod believes we're witnessing something unprecedented, a long-term shift away from fiat currencies and toward tangible assets. In this video, we'll break down his biggest warning, why China is at the center of the story, and what every gold and silver investor should be watching.
We seem to be stuck at around the $60 range since a fairly sharp drop in price from around 70 at the end of last month. Are you viewing this as a buying opportunity, a time to exercise caution? And what is your outlook for the silver market for the rest of 2026?
Well, silver is very volatile, and the only way to treat it is stack, 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 in my view. The price doesn't really matter in the sense that what I'm doing when I buy silver is I'm just getting rid of fiat currencies. That's the main thing. I'm trying to sort of guess where it's going, and using charts and all this sort of stuff is not really the point. I'm pretty certain that once silver moves, and I don't know when that'll be. I mean, I've got opinions, but I can't do more than that. When it really moves, I know one thing for absolute certain. All those people who've been going on about, I'm going to buy silver, when I think it's right, well, they'll miss it. And then they'll be trying to catch their tails. You'll find it's $100, $120, $150. Oh, it's got to come back. I mean, it's going up too fast. It's got to come back, and then I'll buy it. $200, $250, $600. Oh, I better buy it. 10 times above where it is now. I mean, that's what happens. This is my experience of traders. Some traders get it right, okay, which is good, but they are a minority. And all this fooling around, trying to double guess markets and all the rest of it, it misses the point. What we're actually seeing is the death of fiat currencies. And in that case, I mean, you may as well go and buy copper, you could buy gold, you could buy oil, you could buy, anything that you can take delivery of, you should buy just to get the hell out of fiat currencies, because they're going to zero. But there will always be a need for silver, gold, copper, oil, whatever. So that's what you should own.
The Silver Institute projects the market will remain in structural deficit for a sixth straight year here in 2026, with mined silver production expected to rise only modestly, around 1%, according to some forecasts. Surely we're reaching the point where the physical supply-demand imbalance has to trump paper speculation. Would you agree with that?
Yeah, I think you've got to, people have got to understand actually what's been happening with silver. The Silver Institute is right. I mean, you can draw up supply, demand, surplus deficit type charts as much as you like. But actually what's been happening is that the silver price has been managed by China. China is it's the largest importer of the sources of silver, which are non-ferrous ores, particularly copper, zinc, to a lesser extent lead, and also gold. That's where it all comes from. I mean, over 70% of silver comes from that. And as a result, basically, China has been accumulating huge amounts of silver for a very, very long time. It's part of official policy, not publicly declared. They don't go out and tell us this month we bought this month we refined so much, and that produced so many tons of silver. No, of course they don't. They don't tell us what's going on. But believe you me, the policy going back to 1983 has been to accumulate gold and silver. And the PBOC has total responsibility for the acquisition of gold and silver. Now, what's happened is that in the last however many years, when you've got this deficit, which quite correctly comes out of the Silver Institute's tables, that has been made up by China exporting silver to satisfy demand. Why? She's been keeping the price of silver under $50. So, and then this changed. This changed sometime, I would guess, in sort of late September, early October, probably late September, along with rare earths. I mean, the rare earth story had been brewing up for a little while. But quite clearly, China was not going to export silver for America, which had then decided it was a critical mineral, to supply America. So what did she do? She reversed her policy. And we saw silver jump from $50 in I think it was sort of early October, all the way up to 120. And if you look at what China has done in the first quarter of this year, she has bought a total, I think the figure is 1,626 tons. Now, we haven't been given any export figures because usually there's imports and exports. But for some reason, there hasn't been any export figures, if you like, issued. Now, this 1,626 tons annualized, we're looking at about 5,000 plus tons. Now, this, if you like, compares with the roughly 3,000 to 5,000 tons which China has been exporting every year recently to satisfy and to deal with that supply deficit in the West. So in other words, this is a completely volte-face. And it's fascinating that she has acquired all this silver at a time when we've been trying to get the hell out of it. I mean, this is part of a wider policy, actually, because at the same time, China has imported 163 tons of non-monetary gold. That was up to May. We haven't had June's figures yet. And on top of that, there's a further 40 tons recorded of non-monetary gold. So that's an addition to the 163. So around about 200 tons gold. And that's what's been reported. I mean, it could be, the truth very often in these things is somewhat different. So what's she doing? What's she doing with stockpiling copper? What's she doing, sort of ceasing exports of things like fertilizers and sulfuric acid and so on? I mean, the answer to this, quite simply, is she doesn't want any dollars. Her trade surplus is now hitting records. So she's earning foreign currencies, which she knows are going to go to zero. She doesn't want them.
According to Alasdair Macleod, the biggest mistake investors make is trying to predict every move in gold and silver. His advice is simple. Don't chase the perfect price. Focus on protecting your purchasing power. He believes the real threat isn't temporary market volatility, but the long-term decline in the value of fiat currencies. One of his strongest arguments is that China has spent decades quietly accumulating gold and silver while expanding its bullion infrastructure. He believes China's actions reflect long-term preparation rather than short-term trading. Whether every aspect of that thesis proves correct or not, China's continued interest in gold is well documented, and central banks globally remain net buyers despite recent price volatility. Macleod also argues that silver's structural supply deficits have been underestimated because China's exports helped balance the market for years. In his view, if China continues prioritizing domestic demand over exports, the physical silver market could become much tighter than many investors expect. At the same time, today's precious metals market is being influenced by several major forces. Investors are closely watching U.S. inflation data, expectations for future Federal Reserve policy, and geopolitical tensions, all of which have contributed to recent volatility in both gold and silver. But Macleod believes short-term headlines shouldn't distract investors from the bigger picture. His core message is clear: watch what governments and central banks are doing, not just what markets are saying. History shows that institutions often position themselves years before the broader market recognizes a major shift.
So, if you like, you could put it that China foresees a situation that's not prices rising, but the currency's falling, and she's indulging, if you like, in a central bank's version of a crack-up boom, which for people who don't understand what it is, I mean, this was something that the economist Ludwig von Mises wrote about because he experienced the demise of the Austrian shilling and also observed the demise of it was the Austrian crown in those days. He also evidenced the hyperinflation in Germany, which lagged the Austrian one just slightly. And he observed that in around about the last 5 or 6 months of this, this collapse of the currency, people suddenly realized that it wasn't prices rising, but the currency going down. Now, the moment they realized that, they dumped the currency for anything, just to get rid of it. They bought anything, even if they didn't need it. They just wanted to get rid of wheelbarrow loads of this rubbish. And that's precisely what China is doing.
But I believe China is the #1 gold producer and the #2 silver producer in the world. So while a lot of people are paying attention to the import-exports, is China officially reporting all of the silver and gold that they're mining? And how much of that do you think they're taking into their own reserves as opposed to exporting to other countries?
Well, I mean, the answer, I've always maintained that with respect to gold, China is like Hotel California. You know, you're welcome to come in, gold ingots, but you ain't leaving, if you see what I mean. So on that basis, it's really, anything that she's mined, she has kept. So you can add that, if you like, to the balance of, exports, imports. I mean, there have never been any exports. But interestingly, in the last week or two, it's become evident that that is changing. What happened is that the People's Bank of China issued a note saying you no longer need to ask our permission, the central bank's permission to export gold. It's just a customs matter. What that means is that people owning gold in China can send it from China to Hong Kong as part of this new market. I suppose they can send it anywhere, but it's still got to go through customs. So I guess that they're probably restricted to this new Hong Kong, if you like, market development. So you've now got freedom of movement in gold between the Shanghai Gold Exchange and the new Hong Kong market. So that is a big, big change, and that's happened literally in the last 10 days or so.
Yeah, I want to touch on that because Hong Kong has launched a new gold clearing and settlement system. At least 6 major banks signing on, including JP Morgan, Deutsche Bank, and many others. Hong Kong's chief executive, John Lee Ka-chiu, stated, "The launch of Hong Kong's central clearing system for gold will create a historic foundation, allowing us to take the next major step, and that's building a comprehensive gold trading ecosystem. If gold is the world's safe haven, Hong Kong will be its safe harbor." Very interesting development. What do you think it means for the global gold market as well as the gold market within China? You've alluded to it, but would love to get some more thoughts from you.
Yeah, it's quite simple. You've got to look at this in connection with earlier moves that the People's Bank and the SGE have done. Bear in mind the SGE is owned and run by the People's Bank. So, when we talk about the People's Bank and the SGE, we're really talking about one organization. What they did was they opened a vault in Hong Kong, which was an exchange facility, if you like, for gold for Chinese yuan, or Chinese yuan for gold for anyone. And it all fits in with the new payment system, the CIPS payment system, which they've put together. And they've also, interestingly, been opening another vault in Saudi Arabia. And there's talk about these vaults being new vaults being opened in Southeast Asia. There was stories that they would probably open one in Dubai, though events have rather overtaken that. And there was even mention, and I think it was probably a bit speculative, that they would open one in Zurich. I mean, the point is that right from the outset, China realized that fiat currencies never, ever survive. She was emerging from the Mao era into a world of fiat currencies. They weren't going to survive. So what she had to do was to play the fiat currency game, but never forget she needed to protect herself against their collapse. And this has been her policy the whole way through. She, between 1983, when the People's Bank was appointed with responsibility for the entire nation's gold and silver reserves, I mean, I'm not talking about bank reserves, but ownership of gold wherever. 1983, she started accumulating gold in that big bear market. I reckoned, and I did some calculations, it was very much a back of the envelope type calculations, but I reckoned that at contemporary prices, she probably accumulated around about 20,000 tons by 2002. The reason 2002 matters is that the Shanghai Gold Exchange opened, and for the first time, citizens in China were allowed to own gold. And indeed, I think 4 or 5 years later, the Chinese government even advertised, they did television adverts, buy gold, it's good for you, whatever the strapline was. So you can see that there's been a deliberate policy here. They've also, as you alluded earlier, they accelerated mine production very, very significantly, to the point where they rapidly overtook South Africa, which admittedly was declining in its output, and has been the world's largest gold output, miner, if you like, by output, for, I can't remember when the crossover was, something like 2007, 2008. So that's been, so almost 20 years she's been the largest mining nation. And then we have seen this continual migration of physical gold from Western capital markets into China, never to return. So my guess is that she's probably, as the state accumulated a further 20, maybe 25,000 tons. And of course, you've also got the deliveries out of the Shanghai Gold Exchange, most of which has gone into jewelry, admittedly, into the hands of the public. That is a further 28,000 tons. We don't have scrappage figures, but anything that's scrapped has gone back into the SGE, vaulting system, and would have, it hasn't left the country.
Whether you agree with Alasdair Macleod or not, his message is worth considering. Markets may move day to day, but long-term trends in central bank buying, geopolitical uncertainty, and physical precious metals continue to shape the bigger picture. Now we want to hear from you. Do you believe China is preparing for a new monetary era? Or do you think gold and silver are simply moving through another market cycle? Let us know in the comments below. If you found this analysis valuable, subscribe to the channel, like this video, and turn on notifications so you never miss our latest updates on gold, silver, investing, and the global economy. Thanks for watching, and we'll see you in the next video.